Something remarkable just occurred in the mining sector that demands immediate attention. The U.S. government has written a $1.6 billion check to one mining company most people have never heard of. This represents the largest government investment in rare earths in American history. Buried within this development is what could be one of the most significant investment opportunities seen in a decade or more. Getting this wrong means potentially buying at the worst possible time. Getting this right could lead to substantial gains. Recent news indicates there could be more to this story. The U.S. is introducing legislation to create a stockpile of critical minerals. All 7 G7 countries are reportedly doing the same thing. Opportunity is knocking. The deal that shocked Wall Street involves a $1.6 billion investment in USA Rare Earths, ticker symbol USA. In exchange for that capital, the U.S. government receives a 10% stake in the company. Let me translate that. The government became a major shareholder in a mining company. This isn't the government issuing loans through a development bank. This is Uncle Sam saying, we're entering the mining business. The government is investing in what they define as critical to national security. Why do rare earths matter, and why now? Rare earth elements are 17 specific metals most people have never heard of. Things like neodymium, praseodymium, dysprosium. You can't build any modern technology without these. Every electric motor needs them. Every rare earth magnet is built from them. Every wind turbine, every F-35 fighter jet contains rare earths. Your iPhone has rare earths in it too. The problem, or opportunity, depending on your position, is geopolitical reality. China controls 90% of global rare earth processing, not the mining, the processing. Rare earths aren't actually that rare. They're widely distributed. But processing them is dirty, expensive, complicated. Some have radiation issues. It can take years to set up. For the last 30 years, the approach has been to send it somewhere far away and let them deal with it. Now the U.S. has discovered that relying on a geopolitical rival to build weapons systems might not be the smartest strategic decision. What is USA Rare Earths actually building? They're not just digging up rocks. They're building what they call a mine-to-magnet supply chain. That means they mine the material. They have a massive deposit called Round Top in Sierra Blanca, Texas. It contains 15 of the 17 rare earth metals. Second, they process it, turning ore into usable rare earth oxides. Third, they manufacture magnets from them. They're building a massive 310,000 square foot magnet facility in Stillwater, Oklahoma. All American, all controlled domestically. The Round Top mine is expected to start operations by 2028. In mining world, that's remarkably fast. The factory is supposed to come online this year, with first commercial production in 2026. They'll initially buy minerals and process them. Do you think the U.S. government would write a $1.6 billion check if they thought this was nonsense? This is a bet that rare earths will be absolutely critical for the next decade and beyond. Whoever controls the supply chain controls the future. Here's where this gets important for investors. Everyone's talking about AI, ChatGPT, Claude, large language models. Everyone thinks AI is just software, code sitting in some cloud. AI is massively physical and creating an absolute feeding frenzy for raw materials. Data centers are the new factories. AI models need enormous computing power, which means enormous data centers. By 2030, which is only 4 years away, data centers will consume 1,000 terawatt-hours of electricity. To put that in perspective, that's equivalent to the entire electricity consumption of France. What does it mean? Copper is the king metal. Every single data center needs massive amounts of copper for power transmission, wiring, cooling systems, backup generators. The AI sector could account for 3% of global copper demand. That doesn't sound like much, but there's already a deficit. There's more demand for copper than copper being extracted from the ground. It's been in deficit since 2024. and is expected to stay in deficit through this year and beyond. Demand is going up, supply isn't keeping pace, and we're about to add the equivalent of France's power consumption in new data centers. What happens to prices when supply is tight and demand surges? Steel and aluminum are also critical, though boring. Each hyperscale data center requires 20,000 tons of steel just for the structure. Tons of aluminum for server racks and heat sinks. It's not glamorous. Nobody makes videos about aluminum. But when you need 20,000 tons for one building, and you're building hundreds of these, it gets interesting. Then there are chips, the GPUs that run these AI models. They need things like gallium and germanium. Gallium is essential for high-performance chips. Germanium is used for fiber optics for high-speed data transmission. China controls 98% of gallium and 60% of germanium production. The US might want to build domestic capacity. Silicon Valley is saying something needs to be done about it. How did the US get here? Silicon Valley runs the tech world and they buy wherever it's cheapest until the US government literally passes a law forcing them to stop, which is essentially what just happened. Beyond individual stocks, we're potentially at the start of what's called a supercycle. A supercycle is when commodity prices stay way above normal for a really long time, 10, 15, sometimes 20 years. This isn't just a normal boom and bust cycle where prices go up for 18 months and then crash. This is structural, long-term demand that isn't going away. The last big supercycle was from 2000 to 2014. Why? China built China. All the infrastructure. High-rise buildings, high-speed trains, infrastructure everywhere. Brand new airports. If you owned mining stocks during that time, you did very well. Since the beginning of 2025, the metals and mining index has gained nearly 90%. It's outperformed tech stocks. It's outperformed everything. Yet mining stocks are still trading at a 20% discount to their price-to-book ratio compared to the broader market. The sector is up 90% and is still relatively cheap compared to history. That suggests the market is just starting to wake up to this. The super cycle is being driven by three massive trends happening simultaneously. First, the AI boom. Data centers, chips, infrastructure. This isn't going away. AI just started. It's like the internet in 1997. Second, the energy transition. Electric vehicles, wind turbines, solar panels, all incredibly metal-intensive. An electric vehicle uses 3 times more copper than a regular gas car. A single wind turbine uses about 4.7 tons of copper. Third, defense. Countries are rearming. Defense budgets are going up. Every missile, every jet, every ship is loaded with copper, aluminum, rare earths, uranium. You have 3 secular trends happening at the same time, all multi-decade, all requiring the same materials. The supply side is broken. We've been underinvesting in new mines for over a decade. Why? After the last supercycle crashed by 2015, nobody wanted to touch mining. Prices were low. Returns were terrible. From discovery to production, the average lead time for mining is 16 years. That means even if we started building new copper mines today, which we aren't, they wouldn't come online until 2042. Demand is going vertical right now. Supply deficits are everywhere. Copper, silver, nickel. Silver has been in supply deficit for 7 consecutive years. 7 straight years of consuming more than we mine. Eventually, that math stops working. Let's get into specific companies. USA Rare Earths is the first. They just received $1.6 billion from the government. They're the only fully integrated mine-to-magnet supply chain in America. Deposit in Texas containing 15 out of 17 rare earths, plus lithium and gallium. The government literally owns 10% of the company, which means they have a vested interest. If you're a U.S. defense contractor, wouldn't you want domestic tariff-proof supply of rare earth magnets? If you're the Defense Department, you're probably going to guarantee the output. First production is expected to come online this year, not 10 years away, but months away. What's the bear case? They're not making anything yet. It's a development story. Development stories can go wrong. Permits can get delayed. The government owning 10% might offset some risk. The mine doesn't start until 2028. That's 2 years away. If rare earth prices collapse between now and then, everything changes. The government isn't exactly known for picking winners in the private market. Strong risk management is advocated. Second stock is MP Materials, ticker MP. They're the only large-scale rare earth producer in the Western Hemisphere right now. They operate the Mountain Pass mine in California. They're already producing, not a development story. They have record production of neodymium praseodymium, which goes into magnets. They're building their own magnet manufacturing in Texas. They have a multi-year supply agreement with Apple. They have partnerships with the U.S. Department of Defense. It's an established company with real revenue, real customers, and real production. The stock is up 230% over the past year. Despite that run, they're still trading at a significant discount to their peak valuations. Bear case? They're up quite a lot. Rare earth prices are volatile. If prices drop, margins compress. The transition from concentrate producer to magnet manufacturer is riskier because they haven't done it before. This is more established, but you're not getting in at the ground floor like you might with USA Rare Earths. Third stock is Uranium Royalty Corp, ticker UROY. The AI boom is creating a nuclear renaissance. Data centers need clean power. Solar and wind can't do it alone. You need backup, consistent power, because those are intermittent. When the sun doesn't shine, when the wind doesn't blow or blows too much, they don't work. Coal and gas aren't popular with certain groups. What's left? Tech giants like Microsoft, Google, and Amazon are all looking at nuclear power for data centers. In fact, Microsoft has invested heavily in one. Uranium demand is structural and long-term. Once you have a power plant, you need uranium. UROY doesn't operate any mines. They own royalty interests in uranium projects. When those mines produce uranium, UROY gets a percentage of the revenue or production. It's passive income with no operational headaches. Plus, they hold physical uranium, which goes up in value if uranium prices go up. Bull case: uranium demand is structural. UROY has a strong, debt-free balance sheet. They're diversified across multiple projects, not depending on just one. If uranium prices go up, UROY benefits directly without having to dig a hole. Bear case: nuclear is still controversial in many places. Permits can take forever. Uranium prices are volatile. If data center operators decide they can power everything with natural gas or some other solution, the rally won't happen. UROY has less downside risk and less leverage than other mining companies. Fourth stock is the Metals Company, ticker TMC. This one's wild. They're pioneering deep-sea mining. They're going after polymetallic nodules on ocean floors, potato-sized rocks rich in nickel, copper, cobalt, and manganese, all the materials needed for electric vehicle batteries sitting at the bottom of the Pacific Ocean. At the beginning of this year, they became the first company to file a consolidated application for exploration and commercial recovery under a new U.S. permitting process. They're ahead of everybody else in that regulatory framework. They have an offtake agreement with Glencore, one of the world's largest commodity traders. If deep-sea mining works, it could unlock one of the largest untapped mineral resources on the planet. Environmentally, it might be cleaner than traditional mining because we're not destroying mountains. Bear case: it's never been done before. There are huge environmental concerns. Regulatory approval could take a while because nobody understands what they're doing. The technology is entirely unproven. It could be a very expensive science experiment. This is high risk, potentially high reward. It's a speculative play. Fifth stock is Critical Elements Lithium Corporation, ticker CRML. They're an exploration company. They found something called the Tanbreeze Rare Earth Project in Greenland. Recent drilling confirmed they have high-grade mineralization, particularly heavy rare earths. They're planning a joint venture to build rare earth processing facilities. This is earlier stage than USA Rare Earths, or MP Materials, but it's a world-class asset in a stable jurisdiction. Risk: no production yet. Years away from revenue. Greenland jurisdiction considerations. Sixth stock is Gold Resource Corporation, ticker GORO. Gold has done relatively well, up 56%. GORO has also had a very good year. They're a precious metals producer. They had a major operational turnaround in late 2025. They have high-grade production from the Three Sisters area at the Don David Gold Mine in Mexico. That drove strong cash flow. The company is debt-free, which doesn't happen often with mining companies. Silver accounts for the majority of their revenue. Silver has industrial uses. Solar panels, electronics, every AI chip has silver in it. They're also advancing the Back 40 project in Michigan, which is a large-scale development in the U.S. Risk: they're operating in Mexico, which has regulatory and security considerations. What could go wrong? Mining is cyclical. Commodities can swing 20 to 30% in a week. China could cut off exports or flood the market. What if technology changes? What if we get fusion power or new magnet technology that doesn't need minerals? If prices go up too much, people will try to find alternatives. That's the risk, but it will probably take quite a long time. Regulatory issues and execution risks exist. What's the big picture? The government has put $1.6 billion into this sector. This isn't the first investment in rare earths. The AI boom is building massive infrastructure that needs more of these metals, including silver. We're at the early stages of a metal supercycle. If we hit a global recession, all bets are off. This isn't a guarantee. There are risks. Do your own research. Size risk appropriately. But this is a sector worth paying attention to. The fundamentals are real. Demand, deficits in supply, government intervention. If the supercycle plays out, substantial returns are possible over the next 3 to 10 years. Though that's not a promise of future outcomes. Smart money is already moving in.